Okay, folks, welcome to another Thursday Night Stock Charts Live. Thanks, everybody, for being here. What we're going to talk about tonight are, obviously, the weekly charts, just as we do every single week. We're also going to talk about the Federal Reserve's balance sheet, some headlines in the news, economic data that's already been released this week, and then when we finish all that, we're going to go over and into members' stock chart requests. Now, what I've been doing of late, you'll notice I haven't been putting out a ton of free commentary. It's because I've been trying to change things up a little bit, trying to restructure and taking the focus away from purely stock trading. There are so many people out there on YouTube, everywhere. Everybody's trading stocks. They're a swing trader, they're a day trader. And I think that with the market that we're in right now, I would be of more service to current members, future members, if I shared my experience with options trading, basically generating cash flow, being market neutral during times of extreme hyper. I'm not being hyperbolic. I'm being really serious. Hyperly overinflated stocks. And all we need is the single pin to send this whole thing down in a very, very big way, real quick, real fast. So I want to get ahead of it as a contrarian. I want to do what other people, they're not really thinking about right now. They're thinking that this is going to go on forever. I've been doing this for a long time now, been through a bunch of bubbles. And if you're interested, I'm going to review a trade that we're doing right now. I did a video on it on Saturday, I believe it was, or Sunday, on AMD, our short of AMD, which is now, as of today, a neutral trade. And I'm going to follow up on that trade with you at the end of this video. So that way, if you're not interested in options, I'm not going to bother you with wasting your time if you're not interested. But if you're interested, stick around. I'm trying to get a feel for the audience's appetite for learning how to sell options, not necessarily buy options. What I want to be is I want to share how we can be the casino and not the gambler. If you're buying options and you're not hedging, well, you're kind of the gambler. If you're the casino, well, you're selling options, you're managing your risk, you're being very deliberate with your risk-reward probabilities. And we're going to go into that in a moment. And before we begin, please smash the like button, subscribe, and let me give a shout out to our sponsors over at TrendSpider, Automated Technical Analysis. Automate your grunt work, speed up that technical analysis by using their their scanners and their trade alerts. Folks, I use this all the time. It's very, very important for me, not just to enter smart, meaning a rules-based approach. If this, then that, meaning if it breaks out, a stock breaks out, then I buy. But you could also use this to help identify when to get out. Identify, using their algorithm, rising upper bands of resistance where an alert fires off and it tells you, hey man, you're not watching. Listen, you just hit a resistance level. You may want to book profits here. So take advantage, 35% discount code below. TrendSpider, let's get to it. All right. We have a lot to go over, man. Before I get into it, I want to say hello to everybody that's here. And let's get to it. Who's on? Abel. Yeah, we can take a look at that. If we have time, yeah, I'll take a look at it, Abel, no doubt. Frank Land, good to see you again, brother. All right, not too many people on tonight. Quiet night. All right, let's talk about economic data that's been released so far this week. Not all bad, some good. Matt Carter, Larry from Louisville. Monday, we had PMI. Came out good. Good PMI. Manufacturing number. ISM Manufacturing Index, not so good. Construction spending, horrible number. A big miss. Factory orders on Tuesday, big beat. What else we got here? We had Clarita. They don't have this on yet. Clarita. Oh, no, they do have it on here. That was yesterday. Okay. Clarita spoke yesterday. Hammered gold, hammered silver. Son of a bitch. ADP report yesterday. Big miss. Big miss. So you had to have Clarita out there. Oh, no, all is well. Yeah, we're all good. Maybe in 2023 we're going to raise rates. We're all good. Stock market goes higher. ISM manufacturing index, that came in better than expected. And we had today, initial jobless claims finally came in on par. Thank goodness. It's below that 400,000 threshold where we've been these past few weeks. Thank God for people that are looking to trying to find work and not lose their job. I think things are starting to balance out there a little bit. You have so many people that don't want to work, and businesses are reluctant now to let people go because maybe I'm not going to get them back when I want to hire. Friday, non-farm payrolls. Big number. This is the pimp Mac Daddy of them all tomorrow. Non-farm payrolls, and pay a special attention to average hourly earnings. Why? We know that inflation is double the CPI. So let's say that the CPI is at 6. We know that inflation's at 12. How do I know that? Import-export prices. They can't be manipulated by the U.S. government. Import-export prices are flashing double-digit inflation. And if you see average hourly earnings flat to down, well, in real terms, people are losing money. Right? They're not keeping up with inflation. Their standard of living is going down. So, big numbers tomorrow. Let's pay attention to it closely. U.S. Services Survey signals stagflation as prices soar. This was released, I believe, yesterday. Monday, maybe? Whatever, it doesn't matter. Prices are soaring. ISM manufacturing index. Huge rise in prices. So this is bullish for gold. Why did gold rally yesterday along with silver before Clarita came out and hammered it down? Horrible jobs numbers. Inflation is ripping through the roof. You have a Federal Reserve backed into a corner, and for whatever reason, traders just believe what Clarita says, that they may raise rates in 2023. 2023, it's not even 2022 yet. It's crazy. Coinbase. And I'm going over some of these headlines because we have a storm of brewing, a big storm of brewing. And all you need to do is do a deep dive into this stimulus package. Now, this is the bipartisan stimulus package. This is one of two coming out. $1.7 trillion worth of bipartisan infrastructure payments or spending, with only 15% of that money going towards real infrastructure. 10% going towards your traditional roads, bridges, another 5% going towards internet blowout. The rest is nanny-state stuff, man. It's nanny-state stuff. This is one of them. Coinbase, and I own this stock. Coinbase CEO warns of sweeping surveillance of crypto in infrastructure bill. They're coming. They're also going to be putting in cars, what they call because they're tired of drunk drivers and kids being left in the back seat. They've had 1,000 kids left in the back seat since 1990. They had to go all the way back to 1990 to get 1,000 kids. And meaning they either were injured or they passed away. Horrible statistic. But now they're going to have cameras. They're demanding that manufacturers of automobiles put cameras in your vehicle so that you can be watched. If you're tired, your car shuts down. Think about it. Check it out. Google me. Fact check me. This is all in the stimulus package. And as we're on this topic of Coinbase, we're long of Coinbase, doing very well, breaking out here. New weekly highs, new monthly No new monthly highs, but new multi-week highs on Coinbase. What else do we have here? Landlords. Okay, so the Biden administration nationalized residential housing. We can argue about, it's the COVID, it's this, it's that. Listen, folks, if you're a landlord and you have tenants in your home and they haven't been paying rent, you don't care whether it's COVID, not COVID. You've had to pay your bank. And they just extended out the CDC after the Supreme Court said you can't do this anymore. The CDC has come out and they've said, oh, yeah, you know what? Well, we're going to say that you can. This is an appointee. This is not an elected official. You can't charge rent. You can't throw people out. You can charge rent. If they don't want to pay, you can't throw them out, or else it's a $100,000 fine, and you can get a jail term as well. So they've nationalized, for all intents and purposes, residential housing. So you wonder, and I was in shock today when I saw the price action of stocks. I was thinking, is there a trade to be had here? And this is a great company, a best-of-breed company, Avalon Bay Communities. And I was looking for a short potential here. It's holding up well, but I'm watching for a break here, and I'll probably look on a break of Avalon Bay Communities. They have thousands upon thousands of rental units. I know here in New York, they're obligated due to the wonderful government that we have here in New York. You have to have 20% low-income housing. So let's say that their top-tier housing is triple B rated. If you're going to go by the bond standard, triple B to triple A. Then you're going to have your triple C bonds that are inside of this company. And you could bet that in all your blue states, you're going to have a chunk of that type of book of business that they are going to have on their books, not paying rent. So, and they haven't been paying rent. So I'm very, very surprised to see the health of Avalon Bay. It's a great company. I'm not knocking the company whatsoever. I'm going to look for a lower standard, short, more triple C type stuff, real low tier stuff that's doing well and hasn't responded yet to this edict, this nationalization of home rentals. So more to come here, members, on a potential short of, if not Avalon Bay, another weaker stock. Avalon Bay is a very good company. I'd prefer to find a weaker stock to short. But I find it hard to believe that they're not going to react to this moratorium. Falcon, as my grandma used to say, it's all going to burn anyway. Okay. Joseph Gardner, hello to you too. All right. Let's go to the weekly charts. 10-year yield up front. So the 10-year yield is not looking bad on the week. We're down, yes. But we're respecting this lower band of support. Stokes are trying to bottom out. Daily chart. Now, you're seeing signs of life here on the 10-year yield. And there's a trade to be had here. I'm going to get to the trade in a moment. You're seeing a potential breakout here on RSI. You already have higher lows. You have higher lows on your stochastics. Let's change this. And we are nearing the upper band of resistance. We have a bunch of resistance above. So we've seen some interesting price action in the interest rate sensitive plays, such as your cyclical names, banks, transports, what else? Energy. So we're going to talk about those names quite a bit. And what I'd like you to keep in mind when we're talking about those names, and this also includes the Dow Jones Industrial Average, is that if yields break out, then begin to move up higher, with this week's somewhat positive economic data, then we may see a rally in those names because there's a perception that the economy is doing well. And then you're going to get your reflation trade. So keep this in mind that while, yes, we haven't broken out on a daily or weekly time frame, we are stabilizing at worst on the 10-year yield. Bonds struggling this week. The TLT, 20-year bond ETF. We're at resistance. We're struggling here. We're off the highs of the week. Volume above average, but we could be seeing selling into strength on the part of institutions. Hey, BIGC just released earnings, which were pretty good. 42 revenue growth over Q2. If we have time, I'll take a look at it, buddy. You got it. Daily chart TLT. We broke out on the second. We're retesting the breakout point. The question is, do we fail or do we break out? If we fail and we break down, 10-year yield goes like that, and obviously TLT moves lower. The tips. So far this week, a bearish reversal week. On volume, big volume. But to be honest, last week we left the week out with RSI at 80. No great shock. RSI is pulling in. Daily chart. For those not familiar, your tips are your Treasury inflation-protected securities. If they're going up, institutions are buying them up because they're worried about inflation. Right now, you're seeing profit taking here. They got extended. Volume dropped off today. And now they're going into a correction. The dollar. A reversal bar this week. We were down below support earlier in the week. Not a horrible chart. Pretty good chart. Daily chart. This is what I like to call a bear flag setup. And it's kind of a continuation breakdown pattern. We got oversold to the downside. We rallied, and I think that this is going to fail. So while the weekly chart looks good so far, as I always like to say, one trading day left to go. And we know that one trading day can make a big difference from a Thursday night. So the question is, do we hold this breakout point? Do we hold this lower band in blue? We'll find out tomorrow, 4 p.m. The VIX weekly chart. Prashant, hi. If you have time, it would be great if you went over CMG, Chipotle. If we have the time, I'll definitely will, pal. I have to go over members first, okay? And super chats. Weekly chart of the VIX, down on the week, bearish key reversal bar, one trading day left to go. 20 is now resistance and has been pretty stubborn resistance for a while now. Multi-week resistance. Daily chart. I think the S&P is going up higher. Bad rollover here on the VIX. We also broke support. And we closed out the day at the lows of the day. Equities are probably going to continue up higher. Transports. And here's where the news begins to change. I think that despite the fact that tech stocks continued up higher today, they're going to, if bond yields move up higher, begin to lose momentum. and the Dow transports have stopped going down. Holding support. Daily chart. Good day today. I mean, yesterday was just a horrible day. You know, it's a very tricky market. I mean, on the 3rd, beautiful, beautiful bullish key reversal bar. Yesterday, I was doing market wrap. I'm like, man, this is pretty bad. I mean, we undercut and closed down below the lows of Tuesday. And then today, inside bar. I mean, it's like the suspension of reality nowadays. It's very, very difficult this past year and a half to really nail down this market with all the cheap money sloshing around out there. It's so difficult to short. So 2 years ago, this would have been a short all day long. Now, you don't know. You don't know. And you really got to pay attention to volume as well. The Dow Jones Industrial Average weekly chart up on the week. This is a bit of a concern. We need to break out here and stoke RSI. We may get it on a breakout on, let's update this chart. It's kind of weird, this chart. This is all sorts of wonky here. Let's get rid of this. I want to put this up. You know, you don't want to see your indicators stalling below a neutral level when you're at or near all-time highs. There's something wrong there. That's the market sending you a signal. There's something going on there. So we really need a burst up higher here because something's off. Volume's trending in very, very low this week. Daily chart. Rock solid, I'll tell you. Daily chart looking good here. Stokes rising, hockey sticking up, RSI, same deal, bullish key reversal bar. Yesterday we closed down below support. Today we closed back above support at the highs of the day we closed. It's a crazy market. Volume light. And this is why. You know, if you're wondering, you know, why since April have I been so heavily trading options and been somewhat market neutral? With the valuations of this market, I'm reluctant to put on very, very heavy long trades in any one individual stock. So that's why I like to put out strangles and just collect cash flow. Screw it. So we'll talk about, for those just joining in, at the end of this video, we're going to be talking about our strangles and options strategy, cash flow strategy. We're not buying options, we're selling options. I'm going to leave it to the end of this video. So stick around. I don't want to bore everybody that's just interested in options and the weekly charts right now. But everybody's welcome. All right, so here's what I think is going to happen here. I think the 10-year yield is probably going to pop up higher. This is going to break out. You got to love the price action on the indicators. You got to love the fact there was no follow through to the downside after yesterday's breakdown. And that breakdown, actually on transports, it came on volume. There was no volume on the Dow Jones. The Dow transports had some serious volume yesterday to the downside, and they blew it off. S&P 500 weekly chart, up over 0.75 percentage point. We're at the highs of the week. Westlaw. You're the second one that requested that tonight. S&P's looking good. Pardon my yawn there. Looks like we're going up higher. Good looking chart. We're going up higher. Now, the one thing that could throw off the market moving up higher is a big beat on non-farm payrolls. And you may be saying, what are you talking about? What's wrong with you? What are you, stupid? That's good news. Remember, good news is bad news in this market. Good news is bad news. What do I mean? Well, let's go to what they're expecting tomorrow. Non-farm payrolls. They're expecting 845,000 new jobs. Let's say we get over 1 million new jobs. Is it more likely that the Federal Reserve, or the perception, is it more likely that the perception of the market is going to be that the Federal Reserve is going to have to raise rates more quickly, especially with inflation? Especially if tomorrow you have average hourly earnings rise as well, and they beat. If that happens, you're going to see a big shakeout in this market. If you see a big beat on non-farm payrolls and a big beat on average hourly earnings, you're going to see stocks get hammered. Not every single stock, maybe the transports, energy will probably do well, but your tech stocks, watch out below. So keep that in mind. It's counterintuitive, but that's the market we live in. I don't make the rules. It's just the way they trade it. So it's looking good. It should go up higher, but we're keeping an open mind. Small caps, weekly chart. Third consecutive up week after a breakdown the week of July the 12th. We are short of the small caps. We're hoping for a breakdown on the small caps. I have not added to this trade in a while anyway. Couple of weeks. And what we're looking for is this prior. Come on. Yeah, it's not letting me do it. Should be using TrendSpider. We're looking for this prior support level here to now act as resistance. So we'll see. It is acting as resistance. The 20-period moving average is acting as resistance at current. The trip cues. I want to overlay. So I've overlaid the NASDAQ composite to see if there's any divergence between the Qs and the NASDAQ. There's not. So the Qs on a weekly time frame looking good here. Volume's going to roll in light. Daily chart broke out today. Volume declining sequentially, folks. You don't want to see this. When you have an index breaking out to new all-time highs, the last thing you want to see is a lack of interest. We do have a breakout on, actually, no, we don't. No breakout yet on RSI. So it's a good-looking chart. My only concern here is volume and the lack thereof, and it's declining sequentially. The banks. Okay, so earlier I mentioned that I thought that yields would move up higher, and there's a trade to be had here. One of those trades is the banks. Now, one thing to keep in mind about is that, and this is why they may just stand by that 60-day moratorium on residential housing. You're not able to throw people out, evict people, is because if you're a landlord and you're not able to collect rents or are not able to evict people, and you've been doing this has been your life, COVID, and I got people living in my house for free. That's your life. That's nightmare. That's hell on earth. So who's going to suffer? Well, the banks. So you can bet that the banks are getting pretty nervous about defaults on some of these loans if these people can't make their loan payments. So the banks, that's my only concern with the banks. And I do have another concern as well. And that is, I'll bring that up later on if we have time. But the bank's weekly time frame, they're up over 1.5%. Volume, very light. Daily chart. Looks like the banks are going to break out here. And I think that what traders are sniffing out is this. And this is what I've been talking about. That's the 10-year yield. It stopped going down. And I called it here with members on Market Rep. I said, I think that we've seen the lows on the 10-year yield. The only thing that could really knock this down further is one, a geopolitical event. Two, the economy is just that bad. So, and I wouldn't be surprised at either right now. We did the Qs, banks looking good. We're looking for a breakout on the banks. We're looking to buy the banks on a breakout, especially if the 10-year yield moves up higher. Technology looking good. No sense in going over this. Semis, outstanding. We shorted AMD earlier in the week. We hedged that position earlier today on the pullback. And we now have a strangle opened up on a short strangle, not a long strangle, opened up on AMD. We're going to go over that at the back half of this video. Stick around. I mentioned going into the week ahead, the semis, the SMH in particular, was one of my favorite stocks or ETFs going into the new trading week. Well founded. We're up over 2.5% on the week. Daily chart. Today, a down day, reversed off the highs of the day, but reversed off the lows of the day as well. Are we due for a pullback and a rest here? Sure, why not? It's still looking good, though. I think the semis are probably still going to move up higher as long as the rest of the market holds up, and just watch for yields once they hit the 1.5 to 1.6 level on the 10-year yield. It's at that point in time semis get into trouble along with the rest of tech land. Biotechs. This is a leveraged ETF. Bullish key reversal bar on the week. So if you're looking at this number here, 14.53% up on the week, divide by 3. It's a 3 times leveraged ETF to put everything into context. LABU looking very, very good. Let's update this. I've been passing by this chart for the past couple of months. Time to spend a little bit more time here. Do we have a setup? I think we do, but I think the trade that we're going to put on is I'm not going to be buying the shares outright. If I do, I'm going to stay very, very small, but I'll open up a larger position by selling naked puts down with a 40 handle, maybe a 35 handle, generate cash flow. My annotations are not saving tonight for whatever reason. Daily chart. We broke out today. Let's see if we do a retest tomorrow on LABU. This is setting up to be very, very nice. One trading day left to go in the week. Volume very strong today. Very nice chart. Firming up. Possible W formation. Here's the left side of your W. Pivot point, 83 spot A2. Right side. And it looks as though we're going to start building the right side of that W. RSI back above 50 for the first time since July the 6th. Stokes rising, looking good. Consumer discretionaries looking good. No follow through to the downside. Last week we had a bearish reversal bar. This is what I mean. So hard to short this market. Volume's going to roll in light. Bullish Q reversal bar so far in the week. Matt Carter, I know you're out there with your Starbucks. What's your last comment? Hi, Bob and Contrarians. Brewing some coffee, looking for quality plays. Hate to say I made profits on China penny stock mania. I won't even mention what tickers. Madman. Daily chart. Consumer discretionaries look like they're going to move up higher. I so want to short this market aggressively. I just can't. Energy. Weekly chart. Not up on the week. I halfway expected to see an up week, but then I take a look at my Stokes, which are declining down below 50. What happens? Rallies tend to fade. Rallies tend to fade. That's exactly what happened. Daily chart. Possible here. This reminds me of the GLD setup from last week. Like a compression zone forming, higher lows, triangle formation. Stokes looking good. RSI kind of flatlined. Just remember that weekly chart in the Stokes still declining. Oil took a breather this week. Watch the 20-period moving average to act as rising support. That historically happens. Daily chart. Damn it. Wrong chart. I'm saying, wow, that's a good-looking chart. Oil was up today, nearly 2%. Emerging markets, up on the week. Still not loving it. Not quite yet. McCarter, I'm here. Hey, Bob, got a call option on ES, Eversource. Been laying this week. Doesn't expire for a few weeks. Can you take a look at ES if you have time? If I have the time, McCarter, I'll definitely will, pal. Okay? All right. We're going to talk about gold now. Bonds hammered as Clarita unexpectedly hawkish sends yield surging. It's a good cop, bad cop. That's what they've been doing. So Clarita comes out. He's bad cop. Powell's good cop. So the last thing they want to see is gold break out because gold is money. It's the only real money. You can have currency, but the U.S. dollar is not money. The euro is not money. Gold is money. You can have currency, but it's not money. So gold is having a rough week of it. We have Stokes declining down below 50. August is usually a pretty good month. Not panning out so far this month. One trading day left to go. Daily chart. Here's that compression zone I was talking about earlier. Very similar setup as to what we're seeing in the energy space. We broke out, pulled back, attempted follow through. Clarita was having none of that. None of that. Why did gold try to break out the other day? Inflation, 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 and the ADP report coming in half of what was expected. Minutes later, Clarita comes out. Oh, we're going to raise rates at some point in time. Hammered gold, hammered silver, and allow the dollar to rise. They do not want this genie out of the bottle. They do not want the headlines saying gold hits new all-time highs yet again. It's horrible, horrible headlines. I remember it from back in the 70s when I was a kid. They don't want this. Why? It's inflation. Inflation will be on the headlines, and they don't want to go into 2022, the elections, talking about inflation. And they don't want gold being talked about as an investment around the dinner table. They want you in tech stocks. GDXJ, of which we are long, bearish reversal bars so far on the week. SILJ, silver stocks. We attempted a breakout, rejected. All this damage came on Clarida because he said we're going to raise rates in 2023, maybe. Think about the insanity of that. The Fed's balance sheet has risen over nearly $1 trillion so far this year. The year's not even over yet. And we have economic data mixed at best. Unemployment numbers on the ADP coming out horribly, and yet the economy, the traders are worried about rising interest rates. It's bizarre. It's beyond bizarre. NUGT. The other day I was talking about NUGT, of which we are long, leveraged ETF, putting you long of the gold miners. And I said that what I expected here was a pullback. This rejection on a breakout would lead to a filling of this gap. That's exactly what happened today. We had an advanced order out expecting it. It got filled, and we added more today on this pullback. Down volume, rolled in lighter than expected. So we remain very, very bullish on the gold mining stocks, gold, silver, etc., despite the shenanigans of the Federal Reserve. Let's do some chart requests. I think that's it for. If you folks could smash that like button, it would help me out so much. I'd appreciate it. Let's go to the ticker cloud. Okay, we don't have that much to go over. So let's go to TrendSpider. Folks, 35% discount code below, TrendSpider. Automated technical analysis. Let's do a quick list. I got to sign off. I can only take a few tonight because I need to go over that AMD trade. Able, BNGO. My alert triggered. We broke out. Boing. Very, very good looking chart. This is a buy. Very, very good looking chart. Let's go to the monthly chart really quick. We have a breakout in the monthly time frame, weekly time frame, daily time frame. Bullish. Very, very bullish. Looking good. All right. So what's that stock that reported after hours? Two people requested it. BIGC. Let's bring it up on Thinkorswim. BIGC. All right. Big Commerce Holdings, Q2. Misses on earnings. I don't care about earnings. I care about sales. Estimated sales, 49.01. 49.01. So they beat on revs. So it's either one or two things or both that took it down. They were looking for an EPS beat. Maybe they've been disappointing these past couple of quarters. And they disappointed. So it's either that or forward-looking guidance. I'm not seeing guidance here. I'm not seeing guidance. Maybe it's on a guidance. Which missed analyst consensus. Yada, yada, yada. We know that. Company reported quarterly sales. Blah, 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 blah. We know that. All right, so good revenues. Very good revenues. But earnings disappointed. I don't know what the forward-looking guidance is. After hours action, they closed out the day, $2.18. Hit a low after hours, 67.07. You know, you're not going to know what this stock is going to do until the end of business tomorrow. You're just not going to. For all I know, despite the fact we're trading down at current, and I'm not seeing a lot of volume here, unless they paused it for whatever reason. This could go up higher for all I know, and close higher tomorrow. So it's very difficult to make the call. So I'm going to go over the daily closing chart and pretend that there's no earnings. All right, so I'll take it from that perspective because we don't know what's going to happen tomorrow. We rallied off the lows of the session. We went higher. They took it off the highs of the session. This looks to me like pretty much a neutral move on earnings. What is this, BIGC? BIGC. Monthly chart looking good. Not a lot of data here. Now keep in mind that where we closed today was just shy of the highs of last month, which also was support back here in October of last year. So it's not insignificant of a resistance level. I wouldn't be a buyer here. Now here's that same resistance level on a weekly time frame. What I would do is I would wait for the breakout. Okay, long entry or add. What do I mean by that? Let's say we do sell off tomorrow. We have one support level here, but here is really sexy. You get a retracement back down to this lower band of support. Keep a little bit of sensitivity on. That becomes attractive. As an entry point. So if you get a pullback, start looking at 63.60 as support, and then wait for the breakout to add more above resistance at around 73 bucks a share. That is BIGC. So cautious. Wait until 4 p.m. tomorrow to make a decision. Chipotle, Monster. It's looking good. I mean, these are the automated trend lines here. You want the computer to tell you where to sell? If you're long, bing. Create your alert up here. Touch, bounce. Keep a little bit of sensitivity on. Keep this on for 60 days, set it, and forget it. It's going up higher. The weekly chart looks very good. The only thing I'll point out, volume is declining. Daily chart. Another resistance level right here. So I'm bullish on the stock. I think it's probably going to continue up higher, but you're going to start hitting resistance levels fairly soon here. So just be forewarned. I'm going to keep enough sensitivity to engulf both resistance levels. In fact, I'm going to do this. Cancel it. I'm going to create the alert up here. So if you're looking for a place to book profits, maybe you want to scale out, leg out portion here, carry the rest up to the weekly resistance level. Would I buy the shares here right now? No, it's too far extended beyond the pivot point. But I do think it's probably going to continue up higher. Okay, so we'll keep this active for a while. Now, what I would think about doing here, and it's honestly, it's in the back of my head, is this. I'm going to take you back to the weekly chart. And one option, pardon the pun, would be, and again, we're not buying options here. We're selling options. We're the casino, not the gambler. One option that you could do here as a trade, because I am bullish on the shares. I do believe you're going to get stalled out here at this resistance level. So what I would like to do is open up a strangle. Sell a deep out of the money, let's call it just over $2,000 to the call side, collect a premium, go out 45 days to expiration. Sell to the put side, maybe a 1,700 strike to the put side, collect that premium, and then sit, let it go to work for you. And wait, you don't have to worry about, is it going to go up today, is it going to go down tomorrow? I don't care. I'm market neutral on CMG. I don't care. So that's the value of learning these strangles. And that's what I'm trying to communicate tonight, where I'm taking the contrarian trader. It's not just technical analysis anymore. It's not just commentary. It's not just swing trades. It's now option trading. But it's not buying options. It's collecting premium. So CMG looking good. Longer term bullish. But I see a better strategy, and that's just to collect cash flow here as well. Because I don't want to buy here. It's beyond, the time to buy was on this breakout here, or a breakout above the highs of the week of July the 12th. It's too far gone. But it's a good looking chart. I do believe it's going up higher. Remember, you got weekly resistance above. I have 7 minutes to go. All right. Prashad, I am planning to book profits on my long and keep an eye on pre-earnings calls. You're welcome. All right. Forward looking. All right. McCarter is a madman tonight. Bob, I wanted to short Hood bad. No. Don't. You probably couldn't even get the shares. Could you? Did you try? Oh, it got annihilated today. I know they were down. I didn't know they were down this bad. All right, let's take a look at our AMD trade. I want to talk about the whys, and I did post a video. If you want to know more about this trade, I posted a video on YouTube, and it's on the website. I believe it's on the website. Go back to this past weekend. It's there, and it's about AMD. AMD, when we went into the week, had RSI at about 81. We opened up a naked call position at RSI at around 83. The shares continued to move up higher. And what we did today, after we got the pullback on AMD, I wanted to hedge our bet, because what normally happens here, after you get an extreme overbought condition and you rally up and through the third standard deviation Bollinger Band. Your RSI was about 87. You get a pullback, sure. That's not too hard to imagine. But the stock doesn't generally just go straight down. So if we get an orderly pullback here, the stock could consolidate and then proceed up higher. And remember, what we did is we sold the 130 strike calls. You can't even see the number. We sold so far deep out of the money on the call side. And today we sold a deep out of the money put, collecting premium. We haven't made that money yet. It's not real yet. So we opened up AMD. We had at that point in time, to the call side, we sold a naked call 130 strike. The probability of profit on that day was around 90% probability of profit, meaning by expiration date, September the 17th, the shares would trade 90% probability worthless. So pretty good odds. Today, on the pullback, because what we saw was implied volatility rise, so the options got expensive because people got fearful. So they bid up to put options. I said, you know what? I can't resist this. Why not throw on a hedge? So we sold the put. There's a probability of around 92% probability of the shares expiring worthless. Not a bad risk reward on this trade. So this is where we're going. And if there's any questions, please ask me, and I'll be more than happy to answer them for you if you want to drop a question into the chat box. Because our game plan here, here's what I put out on the commentary, was our strategy. And I posted this in the members area. These are live trades I put in the members area, along with the probability. So as a member, you have access to this. And here's our strategy overall. And net, my secondary choice was to go with naked calls, but I did that ultimately the first go around. Now today, after I added the put side of that trade, we are now hedged. And we now have a short strangle. We could have gone with shorting the common stock. We would have had our heads ripped off. Glad we didn't do that. Credit spread, we would have had our heads ripped off. Buying puts, we would have had our heads ripped off. So the best path to take was to sell naked calls and or use a short strangle. I'm glad we did that. And these are the types of trades that we'll be doing moving forward, along with swing trading. So if you're not familiar with this type of strategy, leave a question at any time in the comments section. I'll be more than happy to answer it for you. And that's pretty much it for tonight, folks. I wish I had more time. It is that time of night. I want to say thank you for joining in. Don't forget TrendSpider 35% discount code below. Everybody have a profitable trading day tomorrow and a great week. Till next time, Sunday Night Futures Live, be well.